Analysis in terms of the performance today. We're joined by Julia Lee from Bell Direct, and of course my guest host today, Martin Lakos from Macquarie Private Wealth. Julia, what happened?
Oh, it was carnage on the market today for the miners. It started off really with the volatility that we saw in gold prices at the end of last week and the beginning of this week. And in terms of sentiment, I guess there was a fear that if we could see this much volatility in terms of gold, that it could spread to some of the other complexes, some of the other commodity prices, and even in stocks. So that's the sentiment side of things. I guess on the global growth picture, we have seen readjustments occurring downwards in terms of the global growth picture by analysts around the globe, and that's having an impact in terms of commodities. And then in terms of commodity-based stocks, that also impacts because that impacts on revenues, future revenues and valuations as well. So unfortunately, what started really in terms of volatility in the gold space has managed to spread to a lot of the other commodities as well. It's interesting to note that while we saw gold prices holding up relatively well in Asia, in fact holding up just about 1,376 US an ounce, what we have seen is there's been quite a strong demand for physical demand for gold. In fact, the US Mint recording a record day on the 17th of April, so that was yesterday. So just over 63,000 ounces of physical gold being sold, but that hasn't been enough to really dent the paper market. And indeed today we saw the concern spreading to Dr. Copper. Once we saw London opening up, we actually saw copper prices moving down into a bear market and really breaking some key technical levels. Now, if we remember gold prices and have a look at the 5-year chart for gold, this is what it looks like. You can see that last week we really broke that key technical level for gold, and then we really saw gold prices just absolutely plummeting. Now, if I change over to a copper price, and this is copper prices on the London Metals Exchange, and once again we're having a look at a 5-year chart, and you can very clearly see that support line at 7,000 US a tonne. Well, if we have a look at copper, it's gone below that key technical mark now for copper prices. Copper prices now in a technical bear market, so down 20%, more than 20% since the peak. So unfortunately, that's not good news for the miners. In fact, in the week to date so far, we still have one session to go. The materials sector is actually down by 9.8% just this week. And that makes it the biggest weekly loss that we've seen in this space since August 2011. We did have a little bit of news out of China. We saw house prices for the month of March. And we actually saw growth there of 3.8%. Now, that's quite strong. And that did stoke a few fears that we could see the Chinese government looking to try and cool that property market. And of course, it comes at a time when investors are already nervous about that commodity space. But today was all about staying out of the risk sectors. We saw the materials and the energy space down by more than 4%. In fact, the small ordinary is really underperforming the whole Australian market. That was down by about 2.9%. So it does look like, once again, investors still sort of trying to tend towards safety, but in the end, safety sold off as well. And that has to do with liquidation. Sometimes when you do start to see liquidation happening because of margin calls or because of margining, then you start to see indiscriminate selling. And we saw a lot of the defensive sectors, which were doing well earlier in the session, sold off by the end of the session.
In mind, I mean, what levels do you start looking for at a stock like BHP holding just above $30 at the moment?
Well, $30 is an important technical level for BHP, and if we see that being breached, then the next technical level that we're looking at is $27. And past that, we're looking at prices that we haven't really seen for BHP Billiton since the global financial crisis. So there is quite a lot of uncertainty in terms of the stock. And as Martin mentioned, a lot of it has to do with sentiment. Once we see the breaches of these technical barriers, weakness tends to beget weakness. Now, part of that is within the sector itself, but it does tend to spread to other parts of the market, and I think we started to see that today, and that's really because of leverage positions. So any sort of trader that has a leveraged position in terms of FX, in terms of commodities, or in terms of stocks, once we do start to see these tumbles, they tend to sort of trigger these margin calls and margining as well, and that has an impact in terms of weakness. Now, today was a little bit strange on the market. We did see a very good volume day, $5.2 billion worth of stock being traded. But on the other hand, it was also derivatives index expiry, and we do tend to see a bit of volatility associated with these type of days. But if we have a look at the Australian market, this is the intraday graph, you can see that we ended on the low on high volumes, and that's not really a good sign at all for the Aussie market. We did see the defensive sectors doing well in the morning session, especially Telstra after its announcement of that $1.1 billion contract. But in the end, even Telstra ended up in the red. So that tells you a lot about the sentiment and the feeling on the market today.